All right, hey there. Good morning, everybody. Christopher Inks with Texas West Capital. It's just after 11 a.m. Central Standard Time here on Monday, the 25th of January. Geez, I don't know what month it is. 2021, San Antonio, Texas. 2021 so far, just being an extension of 2020. We'll see if that continues on. It's one of the things I kind of warned about was it's always better the devil you know, right? So everybody goes, oh, great, 2020's over, 2021's coming in, it can only get better unless it gets worse, right? And things aren't looking entirely fantastic. I mean, we look at the comments made by, I think it was Boris over there in the UK, mentioning that the new strain of coronavirus there is potentially more deadly than the previous. We've got unemployment still looking just awful. We've got these new regulations or these new restrictions coming in right now, signed by Biden and his people, that they're talking about quarantining people that are coming in to visit the U.S. or whatever, or coming for business or whatever. You got to get tested before you get on the plane. You get over here, you have to get quarantined, all that kind of fun stuff. So I don't really see how the economy does much better with those kind of restrictions and potentially what's going on with the new mutated versions of COVID that are out there at the moment. So we'll see what happens. But if you are blindly bullish in anything right now, and I mean anything, guys, it's never good to be blindly bullish or bearish in anything. But especially right now, I think you're really setting yourself up to potentially get knocked over the head. Many of y'all don't have any real experience in financial markets. Probably don't have much of in the way of advanced econ courses. Economics courses. And I kind of chuckle at that because economics is considered the dismal science. Nobody really enjoys it a whole lot, except for some of us like me. It's not that. I guess all I'm trying to say is, you're in a market. Everything appears to be very bullish, and I guess this is, we could say it's toward Bitcoin, but we could also say it toward stocks and gold and everything else. But I'm going to be honest with you guys. The things we've been talking about over the last, year and a half, 2 years, really kind of to come in now, and all these different metrics that we look at, how they align with previous market tops, like the dot-com bubble and the great financial crisis there in 2008. And we're seeing a lot of the same thing now. But in addition to all that, we have this record number of zombie companies now, up there, and basically people buying into them because they believe that the Fed's going to bail them out. And I don't think that's necessarily the case. I had somebody ask me, well, what's stopping the Fed from just buying up the bonds of these corporate companies, and then just not redeeming them? Well, because they have a responsibility, for what they do to the populace here. And the effects of just buying up bonds and not redeeming them, I mean, these are longer term effects that it would cause. And so they have to, the Fed has to be careful. It has to be measured in the moves that it makes. It may not seem like it all the time. Many of y'all hinge, are on this, oh, look, they're printing all this money. Of course, as I've explained many times before, QE is not what you think it is. It's not that they're printing all this money and it's in the, in the marketplace. Most of that money is sitting in the vault. It's not going to get into the marketplace. It's there to convince banks to loan out more money. And of course, as we've shown, with the Fed site, banks, the banks are not. Credit is contracting. And so that's absolutely the opposite of what they need. So, I think you just got to be careful, guys, right now. I hope you've made money. We've made so much money on these calls that we've been able to put out here over this last almost a year now. I have my big macro idea. And then, of course, if you guys have been in with us here, that we post setups and everything for Tier 3. And so, especially stock-wise, geez. We've had hundreds and hundreds of percent increases on so many of them, even 1,000 plus. And we've done well, as well in the other things too. But you can't. It's hard if you've never really been in financial markets, to get out of the emotional thing that goes on. But that's exactly what you should be noticing, that everything is bullish. Everything. So we're talking about gold. Everybody thinks gold's going up, to $5,000 next year, basically. Everybody thinks Bitcoin's going up to, $200,000, $300,000 next year. Everybody thinks that, or 100,000 plus this year. Everybody thinks the stock market's just started a new bull run after what would arguably be the shortest bear market in history. But the fact that everything is so bullish should get your sensors up there going, what the heck's going on? So that's what we kind of talk about, guys. I'm not here to, guys, this is the one thing. Many of y'all, especially if you're new or you just kind of half listen, you may think I'm over here trying to convince you and tell you what you need to think. I'm not. I'm just here telling you this is what I'm thinking. This is why. These are how these things really work and what they really mean. Whether you believe it or not, that's up to you. But don't ever think that I'm just trying to spread any kind of FUD or something. I mean, that's the lowest. Guys, listen, if you're out there right now and your first thought when somebody says something that you don't agree with is, oh, you're spreading FUD, slap yourself. Because honestly, that person, I don't blame them for not responding to you. That is the lowest of the most base responses. That's kind of like saying, that's like calling somebody a name just because you don't agree with them. You should be more interested in what's going on and what's the argument there, not assuming that everybody's just trying to spread FUD or whatever. That's an emotional response, and you need to recognize that you're doing it so you don't go out there and lose money that you don't have to lose. That's the key, guys. So let me kind of check back here with you guys. Who's here? Hank's here. He says, no screaming. I'm going to do my best. 51 ETH, what's going on? Good to see you. Sir Hold is here. Marathon Charts, what's going on, guys? This is Satoshi Ray Bitcoin. Denny from Discord. What do I think of the VIX poking its head through the trend line this morning? I think you need to be careful. Remember, if the VIX pops up, gets that volatility, usually that means this, the stock market's going to go down. Remember, price rises not on volatility. It usually drops on volatility in any market. It's the rise on the quietness is what you're looking for if you're looking to long. If you start seeing volatility, be careful. So yeah, I would definitely be careful. And it makes sense with where we are in those, and we'll talk about the stock market here in a bit today as well. Hey there, Simple Rick, what's going on? He says, hey, Chris, never forgot about your iRobot call to the T. Liquidity zone at 124.6 midpoint. Hey, super impressive. Well, glad you got that, man. I'm glad you paid attention to that. That was a while ago, wasn't it? Took a little bit to get there, but it got there. Glad to see somebody's remembered some of these older calls. Nevlusian, what's going on? Abs, hello. Let's see here. Simple Rick says 2020 on effing steroids right now. Yeah, pretty much. What's going on, T-Ball? Good to see you. Baker's here as well. Oh, man, yeah, it's back for right now. We'll see. I think we should be good to go. But, this time of year here, especially in the hill country in Texas, is a time that we call Cedar Fever because cedar allergies, cedar pollen starts to come out everywhere. And that's my Achilles heel. If I were Superman, that would be my kryptonite. So we'll see how well I can do with that coming up here. Let's see here. Farm D, what's going on, man? Enjoyed my guest appearance. Glad to have my voice back. Yeah, thank you. If those of you that missed this morning, I was with Dale Pinkard here, Forex Stop Hunter. They're on Forex Analytics. And I do this usually once a quarter or so. I'm with them. I kind of do that. I guess I give them that opposite, that other side of the trade, that potential, what's maybe going on the other way, because everybody's really bullish, And so it's a great time. You guys should really check in with that when you get a chance. They do great stuff. I really enjoy them. But anyway, yeah, did all that. Good times, right? Hey there, Brian. Good to see you. Silvio's here as well. Esteban. Lily Q, hello there. Let's see here. Yeah, the DXY may be trying to head up here. We're still not convinced it's, it hasn't gone to the part that says, yeah, it's probably bottomed out yet. So still potentially could go lower, but we're going to check that out here today as well. Man, it's snowing over there in the Netherlands right now. Definitely not South Africa there, right? Sylvia? Oh, man. Let me see here. I see I have a question here, 51 ETH. I'll answer that in just a minute. Let y'all know, jump over here and join us at howtotradetowin.com. We'd love to have you there. Don't forget, you can still get 25% off through the end of the month of any of our, whether it's monthly, quarterly, biannually, annually, or whatever packages that we have, and any tier 1, 2, or 3. You can get 25% off as long as you do that. So jump on in there, go to your checkout page. There's a little up here in the right or the left area, right about this area. There's a little button. You can push that. It'll add it to it. Or you can just type in, let me see here. You can just type in welcome 2021 in the where it asks you, do you have a coupon? And type that in. It'll do the same thing. And then there you are. By the way, guys, if you don't know, if you're getting anything more than a month at a time, you're starting to get a good discount on that monthly average price of what you'll pay. So, if you get a year now, especially like a tier 3 for a year, and then get the 25% off of it, it's just crazy low pricing for what we do. So jump on over there, guys. We'd love to have you. All right. Let me check in here with 51's question here real quick. Says, a question about your bigger macro view on the economic landscape. You have talked about the DXY potentially bottoming, strengthening the dollar, and so putting pressure on all assets, including Bitcoin. On the other hand, there are voices like Paul Singer and Willem Middelkoop, who in sorts agree with your point of view and also see this as an end of a super cycle. Central banks are running out of tricks to play. Yeah. But they are in the belief that there will be an extended period of inflation, one that central banks will not be able to control once it starts. I'm confused with which scenarios are plausible, and thus how to try and navigate this whole mess. How do you see a possible change in outcome? And will this possibly be accompanied by inflation of currencies or rather deflation or both? Today is another extreme and peak euphoria and madness on the stock exchange. BlackBerry, GameStop, those things popping up. Yeah, I mean, that's a great question. And I'm going to tell you the same thing I've said to you guys before. To be honest, I mean, I've been honest with you guys about this. None of us out here really know what exactly is going to happen. We have ideas based on our beliefs on the way that things happen and what normally happens in the past and, all these things. But, as human beings, these things can be colored by our general ideas of what should happen anyway. So, again, it's that whole adage, if you're a hammer, then everything, is a nail, right? And then all that basically means is, when you view the world in a certain way, you look for things that kind of confirm your view. The problem with this macroeconomic policy and stuff like that is that it's very intricate. It's very interrelated. And so if you go purely off things like math-based economics, econometrics and whatnot, that's generally taught at the university level these days, I think that puts you at a disadvantage. I'm a firm believer in the markets being a result of what's going on with everybody. What does everybody feel? What is everybody thinking? It's that whole idea of what they've termed socioeconomic theory. And I think that, pushes to a greater degree the markets than what econometrics does. Because, as people, we get to that point where we say, so here's the thing, the economy has to continue to grow. It has to continue to expand. So how does it do that? Because we're a debt-based economy, it has to, not we want it to continue, guys, it has to continue growing. Because if it just slows down or heaven forbid reverses, it's very detrimental to the economy because it's a debt-based economy. That means, why is that important? That's important because when you take out credit today, you need to be able to pay for that with cheaper dollars tomorrow. So you have to have a small level of inflation to make sure that you're paying back your debt with cheaper dollars. The problem is, if your dollar becomes more expensive, you're now paying back that debt with more expensive dollars. Your debt just became more expensive. And if you're in a situation where your economy is based on debt, then if you get to the point where your debt's becoming, you're paying your debt with more expensive dollars, that is highly detrimental. You guys can see how that would be very bad, right? And so we don't even just look, you don't just look at the people here or the companies in the U.S., but look at the holders, the ones that owe U.S. debt throughout the world, the countries, most especially the smaller countries, because a deflationary dollar means that all of a sudden they can't afford, and they won't be able to afford to pay their debt, which means you're talking about if they aren't able to restructure it, you're talking about defaults on debt. And just like in the smaller, when you look at people not being able to pay for their house, so it gets into foreclosure, it gets sold at auction, lower price, brings down the prices overall and everything. It's the same idea. So you have the value of the dollar going up and the price of things going down. And it's this, what they talk about, that deflationary debt spiral kind of thing going on. And that's a very difficult thing to get out of. It takes time. And basically that's the system cleansing itself of all the excess that's gone on. All this excess, because it is excess. Because if you are manipulating the interest rate, which is what the Fed does, to get you to do something that it needs you to do, which in this case, it's trying to manipulate not just the interest rate, the interest rates are really low now, but they're trying to encourage you to take out more debt, to expand credit. But as we've shown you over the last year, credit's actually been contracting. QE is meant to encourage the banks to lend out more money. That's where your dollar creation comes from. And the banks are like, hey, nah, we don't want anything to do with that. Because if we default, the banks are left holding the bag. And you say, oh, but what about 2008 where they were bailed out? Some were bailed out. 500, I think it was something like 500 plus banks that went under between 2008 and 2015. And the previous 7 years, there was only like 20 or 25 banks that went under. So a significant increase in banks that went under due to the great financial crisis. They weren't helped out. Yes, the government helped a few banks. Again, it's government. Who do you have favors with? And if you don't, you're kind of left out there to fend for yourself. So banks don't want to go through that. They don't want to, potentially go out of business. So the Fed says, here's some easy money. Look, you can put on your paperwork there that you've got these loans sitting here, this collateral, these reserves, so you can lend out all these loans. But the banks ultimately have to do it. And if the banks aren't doing it, well, then guess what? The money printed by the Fed just sits there. It isn't in the economy. It isn't circulating. There is no inflationary effect except on assets because the Fed actually buying the corporate debt. But then you say, oh, well, so then the Fed can just keep doing that. Why? Well, no, they're not going to just keep doing that. If you think it's that easy, you're not paying attention. There's a lot that can go wrong with doing something like that. You don't want to encourage continued asset inflation without the economy picking up with it. The bank does that for the asset inflation to help convince everybody else that the economy is going to go back up. But look at everything else. We're not getting that. We're getting declines in unemployment, we're getting declines in employment. So, unemployment's not doing so well. And you start looking at all that. The corporate defaults on real estate are high. Corporate level of bankruptcies was a record level last year. You've got a record number of zombie companies right now, which are companies that are basically just getting propped up by people's belief that the Fed's going to bail them out. But the Fed just can't do that. It can't just go out there and just put that money out there and bail you out and everybody out and think it's going to be okay. If they could, they would have done it already back in 2008. But they let a lot of businesses die off. It's not going to be any different this time. Except at this time, that bubble is so large because of QE over the last 10 years and that asset price inflation. Or I say inflation. I don't like to use the term inflation on prices because inflation just means an increase in the number of things. Deflation is a decrease in the number of things. And so inflation is an increase in the money supply, right? But it leads to higher prices. That's what you say. Don't say an inflation in prices. It's such a misnomer. Don't say something like that. It's incorrect, I guess is what I'm trying to say. So, yeah, so what is going to happen with all... Sorry, I didn't mean to get off the point there, but I need to give you a little bit of background there because in order for inflation to kick in like y'all are thinking, there actually has to be spending. And spending is not going to happen unless the economy is doing better. And the economy is not doing better. That's the thing. It's nowhere near where it needs to be. So as long as the economy is not doing better, then people are not going to be taking out new loans. They're not going to be expanding their credit. And the longer this stays like this, the more likely they are going to be to default. And again, the defaults lead to foreclosures and repossessions or whatever, which leads to people auctioning off and selling at lower prices, which brings the price of everything down. None of that's good for, a debt-based economy. It's good for us. We can buy things with cheaper, we can buy things at cheaper prices with more expensive dollars. That's great for us. But all these companies and the government, everything that run on this debt, it's a very detrimental thing to them. So the difference between now and in 2008 is that I believe we're at the top of this debt bubble here. And so what goes on? Well, we talk about deflation, right? And so here's another thing you can look at. It's something I forgot to mention there with Dale this morning on that podcast I was doing. But this right here, the GSG, if you type that in up there, it's your iShares commodity index, okay? The idea being that commodity prices, as they're dropping there, is deflationary, okay? The idea that if the commodities are rising, that's inflationary. If it's dropping, it's deflationary. So if we're looking at this, at minimum, we've got a 1, 2, 3, 4. 1, 2, 3, A, B, C is 4. We should have a 5 lower still to go on that. So, this dropping down should be more of that, support for deflation coming in, the idea of deflation, right? The other thing we've talked about is our TLT junk here. Looking for, a move out of this right now. We're back here in this demand structure from February of 16. Right here, we're trying to find some bottom down here. You can see that we're bouncing out of oversold in RSI and Stochh RSI on the daily. Oh, this is the 3-day. I'm sorry. This is even on the 3-day. This is even the daily. 3-day rise. Look at this 3-day advance right here. Kind of making up what we lost here, over the last three days or whatever going in there. Right off this EQ area. 78.6 retracement. And so my thought is we're going to have this move up like this, where we get it way up here. Now remember, the TLT against your junk. Remember that your TLT or your treasuries, they're your investment grade securities. When you are scared about the economy, you go into TLT. Your 20, that's your long-term treasuries, okay? Your JNK, your junk, that's your junk bonds. Those are your corporate debt. And so the way you read this chart is, if we're dropping down, that's generally a more of a risk-on environment. If it's going up, that's risk-off. Risk-off means you take money out of risky assets, you put it into safe places. Stock market, Bitcoin, these are risky assets. So if this is rising, as I've shown you before, that works in opposition to what's going on with Bitcoin or anything else. We can throw it on here real quick. Let's throw the BLX on here. Let me see here. New price scale. All right. So just as a quick aside here so you can see this. There you go. So as there's a decline, this is more of a sideways here. And really, you look at this and you go, oh, but look, Chris, it's rising here, it's rising here. Really, this is sideways. This is sideways here. And this is kind of sideways, except this is rising a bit. So then we get over here where we get to this bottom, and notice how this goes down. So risk on, right? Because this is dropping. What this tells you is people are moving out of TLT and into junk bonds, which is more risky. And as it does, you can see the price goes up here. But historically, it's the opposite, right? So when this moves up, people are getting out of junk bonds and into the treasuries, the long-term treasuries. So risk off, in this case, is down, right? Now, there's never any perfect overlap, guys. Sometimes they'll rise at the same time. Sometimes they'll drop at the same time. But overall, what you're looking at is the overall chart and what's going on there with it. And in general, as you can see here, you can get these oppositions here. And then this is just Bitcoin. You can see the same thing with stocks and everything else. And you say, well, why is that? Why is that happening that way? Well, because at the end of the day, really, this TLT junk here just kind of runs along with what's going on with the dollar. Now, I've told you guys, everybody's romanticizing the death of the dollar. This is my big thing lately. Everybody's talking about how the dollar is going to die because they need Bitcoin to do better so they can do better, right? It's what they, all these new entrants into the market, they don't really understand financial markets or macroeconomics or anything like that. And so all they know is everybody tells them that Bitcoin's going to replace, the dollar's, world reserve currency and all this other nonsense. But the reality of it is, guys, as Dale pointed out, Dale's been around longer than I have. He started in the 70s. I think he started on the floor of the CME. That's Dale Pinkert over there at Forex Analytics. But he mentioned this morning when I talked about the romanticizing of the death of the dollar, he mentioned that back when he started in the 70s there, that they were talking about that. Already back then. So you guys got to understand, everybody's talking about the death of the dollar right now. It's the same mantra that they've been going on for, 50 years now? It isn't going to die like that. People have to understand. But if you say that, then people get upset because all of a sudden these dreams about how they're going to buy their islands and their penthouses and their Lambos and everything kind of goes out the window, right? Though it doesn't if you actually learn how to trade, guys. That's why we're so big on teaching people how to trade. Because regardless of what the market does, you've got a skill set you can use. Rather than just kind of throwing in money and hoping it goes up and going blah, 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 and not listening when somebody says something that you don't like. Or you respond with, oh, that's just FUD. Like I said, guys, that is the lowest of the low response right there. Don't ever do that. You're smarter than that. You don't have to reply that way. Because it makes you sound very, very childish. And anybody that's been in the market for any length of time, like really traded, guys, when you say something like that, the first thing that clicks on in their head is, well, that's an amateur right there. That's somebody who's going to be liquidity. They're the person who are feeding the bigger accounts out there with their positions. It's the first thing we say. So don't do that. Don't ever do that, all right? But as you can see here, the dollar and this TLT junk pretty much mimic each other, right? So what can we expect? We can expect that if we continue to get this reversal out of here that it looks like, we should expect the dollar to go up. We should, as you saw, expect Bitcoin to go down. And again, you can do the same thing when you look at gold and stocks and everything else. So it's not just because, oh, I'm just trying to spread FUD or something stupid like that. It's because there's a reality to what's going on here, guys, that you absolutely have to pay attention to. Now, again, I keep saying you can lead a horse to water, you can't make them drink. I can tell you guys this till I'm blue in the face. Whether you're going to believe it or not or listen in or not is wholly up to you. But I can't, you can't ever say that you weren't warned. You weren't, this wasn't discussed as a possibility. Here's the thing. You don't even have to believe this. Now, you'd be smart if you believe it because I've shown you how it works. But you don't even have to believe it. You just have to go, okay, well, what if? Start playing what if games. Understand where you need to get out of whatever market you're in if something like this plays out. What do you need to do to make sure that you lock in your profit? Because at the end of the day, that's what it means to be a trader. You lock in profits consistently. You minimize your risk intelligently. If you can do those two things, guys, I'm going to tell you what right now, you've got a heck of a chance to be successful trading. But those two things are the things that new traders don't want to do. They want to hold on because they think price is always going higher, and sometimes it is. And they're scared that if they go out and it continues going up, that they're going to lose out because they won't know where to get back in because they don't know what they're doing. Guys, if you're in the market, learn. You have no excuse not to get your butt out there and learn. But I'm going to tell you what you're not going to learn. You're not going to learn on crypto Twitter for the most part. There's a couple of good accounts out there. And I've mentioned them before here. But for the most part, most of those people that you guys follow on crypto Twitter are not going to make you money. They might get lucky on a trade here or there. But as far as being a trader goes, you're not going to make a living following them. You've got to learn how to do this yourself. And once you learn really how to trade, you're going to find out that a lot of what you see on crypto Twitter and other social media are things that end up hurting you more than anything else. And you'll be able to, get away from that. But it's a tough thing. It's tough to convince people when they have a certain narrative. It's hard to be louder than the buzz of what's going on. When everybody thought that, including the Fed, that everything that was going on with the mortgages and whatnot leading into 2008 were just fine. They were a good economy. And 2008 comes out of nowhere, right? Me and a few others were talking about it. Not a whole lot. We were getting laughed at. Same thing's happening right now. I mean, you have to pay attention to when things change. When do things change for people? When do people act frothy and euphoric? And I'll tell you what right now, talking about, $500,000 next year in Bitcoin or the start of a new bull run in stocks, or, $4,000 in the next year or two in gold, all these things. I mean, these are all good signals that a top is likely closer than not, because these are very, very far out there valuations, very far out there ideas. You guys that have been following me, you know that we talked about back in 2017, in December of 2017, you know my little story where I was talking with Scott and I mentioned, oh my gosh, there's a guy online here that everybody's touting around. He's talking about 80,000 by February. That was 2 months. I said, that's it, man. I said, we're at the top. If we're not at the top, we're about to be there. And sure enough, we were. It's the same idea of what's going on now in all the other markets. But, typically, again, same thing. People don't want to listen because they want to believe that it's going to go up. But it isn't enough just to want to believe something like that, guys, if you're going to be a trader. You've got to actually, it's got to make sense. And it doesn't make sense. There was a Bloomberg article recently about newbies finding pink sheets. Pink sheets, if you don't know, are over-the-counter trades. They're penny stocks. Think of them as your altcoins. Same idea, guys. Same idea. And so this is the new big thing here. This isn't going to end well. Stuff like that. Historically, people do not get excited about pink sheets, these penny stocks, except at the top of the market when they feel like they can't lose, when everything's going up, everything's fantastic. So, I mean, again, guys, is the top in? Maybe. I don't know for sure. Nobody does. But if you're blindly thinking that it's definitely got to go up and you're not understanding the rest of what I'm talking about here, you are at a strong point of likely losing money. Don't let that happen to you. You're in a real market, guys, using real money. Have respect for your money. You had to do something to earn that money. You had to, you always have to work, right? Hopefully you didn't steal it from anybody. But you have to work. And maybe you had to get an education in a certain thing to be able to work, whether it's trade school or college or whatever it is. Heck, even high school, guys, the idea is you had to do something to get to the point where you can make this money. Don't just toss it in there like it's a $2 scratch-off ticket. Some of you guys, you put a lot of money in there, a few $1,000s, 20s, tens of thousands of dollars. But you treat it like it's a $2 scratch-off. Stop doing that. If you do not respect your money, you will not make money with it. You have to give it that respect, because in doing that, you're giving yourself respect for what you've done to get that, because you have to make a choice with that money. Do you put it in the market or do you do something else with it? You guys got to be more realistic. You got to be more serious about it when you're trading. Let me kind of catch up with you guys here a little bit. Excuse me. Let me see here. Let me see here. Byron, what's going on, man? He says, for those of us early in our education, are pivots, support and resistance, something for us to key on while learning the nuances of Elliott Wave and fib retracements? Most definitely. I still use fibs consistently. Those of you that have been following me know. Those of you that are in Discord know. Fibs, to me, for a few years there, that's all I traded was fibs. I'm sorry, not fibs, pivots. I was a pivots trader. That's it. For a few years, that's all I did. And so even today, it still has a strong influence on me because I learned so much by trading it. And a lot of it is something that just takes time to see how price acts. When price moves impulsively up through the pivot, usually it's going to target that R1 or that R2. If you're going to R3, that usually means you're going to R5. Same thing if it's going to the bottom, S1 to S2. But if you get to S3, you're usually going to S5. And those are just traditional pivots. No, nothing fancy. And there's different kind of pivots you can use. But the pivots just give you areas of support and resistance based on previous price action, which is all it is, guys. At the end of the day, all you're doing is moving between levels. It looks like you're moving diagonally, but really you're just moving vertically. That's all you're doing. You're moving from one support resistance level to another. And so pivots can help you easily identify these general areas. But the thing is, you don't want to take them as absolutes. Price often, goes just above it or just below it. It doesn't stop right on it. So think of them as ranges, as areas around them when you're looking at them as supporters, resistance. Yeah. But they're a great way to start that. Hey there, LXT. Good to see you. Data's here as well. I don't want to be famous either, Data. Let's see here. Hey there, Kyle. It says, say it so many times, eventually you are right. I don't know what you're talking about there. Something I'm sure I said there. Hey there, Kerouac. Good to see you. Telltale. Good to see you as well. Hey there, Alex Webb. Good to see you, man. So here's the thing, guys. I'm not sure what Kyle's saying there. If Kyle's saying that, I've been saying it for a while now, so eventually it's going to become true. Well, again, that's the amateur thing to say. We're talking, guys, listen. And I don't mean this to be disrespectful, Kyle. I mean this to be reality here. Reality check, okay? Here's what's going on. The basis of everything that I'm talking about is on this cycle right here. This cycle right here. This is the super cycle. So we get a 1, 2. We've got a 3 here we're finishing out. We should have a 4. This is the Great Depression. All right? So when you talk about a reversal of this low here was 1932 to 2021 now. Almost 100 years, 90-somewhat year cycle right here. It's not going to happen overnight. It's going to take a little bit. There's a lot of selling to do into that for the market to kind of reverse off. If you're of the type that when somebody says something macro-related and it doesn't happen overnight or it doesn't happen in a month and you go, well, you're wrong because of that, just get your money out of the market because you have no clue what you're talking about. That's the problem. But you go on there and you feel all smart about yourself, and then you go on and lose money. And then you try to justify and go, well, you didn't know. Look, it happened here, and you were talking about that for a while. Absolutely clueless, guys. Don't be those people. Understand that when you're talking about 90 years of advance, it's not going to happen overnight. It's going to take a little bit. It's taking a little bit longer than I thought it would, sure. But nonetheless, it's doing what we were looking at it doing. I posted a chart in 2019, something I talked about all throughout most of 2019. Finally published that chart. And it goes A, C, D, E. Anyway, so you get the here we go. A, B, C, D, E. It gives you this megaphone shape. Let me see here. I think I've got it here somewhere. See if I can find it real quick. I'll show you. Just so you guys don't think, he's just saying he did. He didn't really do that. Let me find it here real quick. But I'll show you exactly what I'm talking about here because this is something I posted back in 2019. Here we are 2 years later, doing what we were looking at. Let's see here. Because we had 2 ideas coming into this. And this one was the second one. Let's see, where are we at? God dog it. Where's those charts? Sorry, give me just 1 minute, guys. I'll find it here. There it is. All right. So I had 2 things we were looking at here. So this was the first one. This was posted when? March 29th of 2019. And we're looking at potentially a similar situation, potentially, as what we saw in 1987. October of 87, we had this drop. And so after that, let's see, this was March 29th. It was about May or so, I think, maybe. April, May. It wasn't too long after this, I started talking about the other possibility, which is similar to this. But it's this right here. I finally posted this December 23rd of 2019. A, B, C, D up here at around 30,000. E, and back up. And so that's basically what happened. We went up here just below 30,000, 29,000 or so, and then we had that strong drop off here, and now we're coming up. Now, if this is a wave 4, A, B, C, D, E, we're finishing out that wave 5 to a slightly new higher high. Nothing I haven't already talked about years ago. Those of you that remember also know that back over in May of 2018 here, I called this, and then this low over here as well. And that was, a couple years before that happened. So it's not like I don't know what I'm talking about here, guys. The reality of it is, things are happening as we would expect them to happen in the situation that I believe we're in. And so far, the market's not doing anything different than what you would expect, what we would expect. It's doing those same things. Let's get on here real quick. So I'm looking as far as the stock market goes. Let's see here. So we got a lower low here. So again, I've talked about the possibility of having one more move up. It's possible right here that this is the top here. We've got like a 1, 2, 3, 4, 5. But here it's possible we've got the same thing going on. Maybe an A, B, C, D, E. And then we'll get a higher high here. And then we'll reverse off. And that doesn't even have to happen. It could continue going up higher beyond that. But just based on the count and where we're at, that seems like what we're probably looking at. But it's not just with the Dow Jones here. We can look at what's going on with the S&P E-minis here. And so again, the idea that we may have a little bit further up. Is this a 1, 2, and then A, B, C. So 1, 2, 3, 4, 5, a little bit higher up here, maybe. But if we're dropping down here, if we're closing below the pivot, which now we're going to have to get below this swing low here on the S&P E-minis at 37.8850, we got to get a close below that. But if we're getting below that, I'd be cautious about further upside. If we can continue on down below wave 4 here, wave E of wave 4 at 36.9575, to me that tells me the top's likely in and we're reversing. That's the top. That's 5 of 5 of 5 of 5 of 5. And we should expect then, of course, the Dow Jones will also be moving down. For the Dow, we're looking at a move down below this wave 4 here at 26,143.80. And the same thing with the NASDAQ. We're looking for that drop down as well. So, again, setting itself up to do what it's doing, right? If we go here to the DXY, this is the culprit, right? This is what's causing all the headache for y'all. Potentially bottomed out down here. No guarantees, but potentially. What we need to see first is a move above this wave 4 here. Notice we're talking about wave 4s. Because if you retrace the whole last wave, the 5th wave, which means you go beyond where wave 4 terminated, then that locks it in as done. So we need price to get above 90.726 here on the DXY. And at that point, we can go, okay, that's probably the first clue that the bottom may be in. Until that point, we're not there. It could still roll over and head lower. The other thing I'm watching is this big descending channel resistance here. I think if we're getting above that, I think that really sets up the idea that we're probably bottomed out. Why? Because that's this large channel here from back here at the end of March. And it's kind of screwed up a bit here because of trading view. When you move off the chart, it kind of moves. But there we go. And I know I've got a lot of stuff showing up here on the daily. It is what it is. Let's see if I can do it on a 3-day or so. No, stuff's still showing up. There we go. A little bit cleaner there. We look on the weekly here. But, again, finding support around this EQ here. Finding support back here where we were at the lows of 2018. Kind of bouncing out of that is what we're looking for and to continue on up. But I think that sets it. At least This, at least a move through this, you should be looking at your pivot up here. This is your weekly pivot at weekly and monthly pivot at around 94. Should at least be going there. If you're coming over that, R1's your next target up here, just by pivots, up there around 98.8 or so. But I think that really kind of moves it, and you get this potential move up and out of that. And so if you keep on zooming out here, well, now you're looking at this, and you're looking at this move. See if I can put this back on there, that larger time frame. And you're looking for a move potentially out of this descending channel. Touch at the bottom, touch at the top, touch at the bottom. I mean, this is as perfect a pattern as you get, guys. Alternating touches between support and resistance. You've got 3 of them. Usually it means you break out. And, I mean, I don't know. Again, if we're looking at this as a pattern. Now, it's a lot larger pattern, so I'm kind of iffy on it. But, you always look at that pattern target as a possibility, right? Dollar at 150? Maybe. I mean, but this right here, that's depression-esque. You're not getting up here and not escaping a depression. This is huge dollar deflation here. And there's absolutely, this kind of move up, there's absolutely nothing the government can do about that. You got to let it play out. You got to let it purge itself of all the malinvestment, everything else that's going on in the economy to get that to come on back down. I'm not saying it's going to go up there right now, guys. I'm saying if we're breaking this descending resistance here, just like any other time on any other chart, it's a descending channel. Height of the channel at the point of breakout. That's your target. This would be detrimental. Everything going on there. And you say, oh, it can't be done. Look at this right here. Look at 95 to 01 here, this 6-year period right here. That's almost that rise right there. 41 on that rise right there. So don't think for a second it can't happen. It can certainly happen. Now, if we lose this area here, this low here at around 89 or so, 88.25 kind of area, we can look for potentially getting down here around 83. Maybe a little bit lower on that. So, this is the reality that people don't want to pay attention to. Because doing so ruins whatever they may believe is or isn't happening at the moment. Gold. Remember, this is my big gold idea. It's the idea we've got an expanded flag going on. Bring it back down here to that $900,000 area. Locally, right now, potentially this 1-2 here, and then ABC up so far right now. Right now, it's only 3 waves. If this is only 3 waves, this is corrective. This is dropped below this swing low here, so it really kind of starts looking like it. But you need to have some further drop below the pivot, and then below this one right here, which is 1831 and 10 cents. If you're getting below that, I think you should be looking for this count. You should be looking a lot lower down. Potentially down here toward, well, first you want to look right here around 1713. But then looking lower off that as it continues down from that. And we're in this descending channel. Touch at the top, touch at the bottom here, touch at the top. I don't like this part of it where you've got price kind of hanging around in this inner 60% area, 70% area. That doesn't make for a very strong pattern. What you want to see, guys, just if you don't know, when you're looking at channels, and by God, guys, use channels. They are one of the easiest things to use and one of the most predictive as far as trading goes, okay? But here's the thing. If you're using a channel, you should see price doing this. Definitiveness. Between. Okay? If you see that, that's a strong pattern. So on a break, go with the break. If, however, you see price doing something like this, or something like this, where it's all kind of hovering around the middle, be a little cautious about the pattern. Okay? Or worse yet, I see a lot of people, they do their channels like this, and it goes like this, and up here again, and then down here, and then down again, and then back up. Yes, price is moving in that channel-ish type thing, but notice you've got 2 touches of resistance, and then you get 2 touches of support. Remember, I said if you want a strong pattern, it should be going up from resistance to support or from support to resistance. That's a strong pattern. This right here, all this says is price is unsure. You've got this resistance here, which is working well. You've got this support, which is working well. But this is not a channel in the sense of what we were just talking about. The channel where price moves back and forth between support and resistance says, okay, if we get a break from this, it's moving. Whether it's up or down, it's moving. This type of thing here says, well, we may get a break out of it, and if we do, we may see this. And however it wants to do it. You're going to break and probably pull back in. Not all the time, but the odds are a lot higher that your breakout won't be what you're looking for if you're just getting multiple touches at support or resistance rather than alternating touches. You want those alternating touches. And that's in any pattern, guys. If you've got a triangle, like that. Let's say you're coming up from here. You want to see strong touches back and forth. You don't want to see none of this kind of thing here. This is weak. This is strong. And if it's strong, it's more likely to continue through the breakout. So always be watching that when you're looking at, what you're doing in terms of your positions there and what's going on with all that. Let me see here. Train, what's going on, man? It says, would not know any of this stuff if I didn't listen to your rants. Let me see here. Let me kind of catch up with you guys here. 51 ETH, you're very welcome. I'm just getting to where you thanked me there. I appreciate you. Thank you. Let me see here. Brian Riley says he follows those crypto Twitter traders who chastise people for not buying enough. Yeah, guys, understand. If you feel yourself being pulled by what's being said in social media, understand that these are emotional words that they're using and emotional. And if you're trading, there's no reason to be trading emotionally. You are going to lose a lot of money, if not all of it, if you're trading emotionally. Emotional trading loses you money. So, it irritates me on a personal level with people out there say, oh, have fun being poor, or, man, you've got a small brain if you're not buying. It's the dumbest thing in the world. And I think it's not even so bad that they're saying that. It's that people actually listen to that nonsense, and they allow that to guide them. I mean, to me, if you're allowing that to guide you, there's a real issue with what with how you're thinking. I think that's your issue, not in not buying, but in allowing that sort of rhetoric nonsense to convince you that you should be buying. Because they're not going to suffer the consequences if they're wrong for you. Another thing here real quick I want to talk about, guys, is a lot of people are all excited about Michael Saylor and all these guys getting in here, right? Or all these guys. And they're like, oh, look, they're getting in. All this institutional money's getting in. So there's no way Bitcoin can go down. There's a lot of ways Bitcoin can go down. But what I want to talk with you real quick here is these people that you're excited about. Michael Saylor. How did Michael Saylor do at other market tops? Well, we can look back at advanced microstrategies and we know they tanked. They were one of the worst hurt by the dot-com bubble. And since then, he's just kind of gone sideways until all of a sudden making this big public thing about buying Bitcoin. That's the only reason his stuff has gone up here recently. Since 2001, it's basically just kind of, it went up a bit and then just went sideways. But yet this is the evangelical that you guys are all following, rooting on and whatever. And I say, if you're going to follow somebody who's done well in those, if you're going to follow somebody with a lot of money, I don't think it's necessarily the greatest thing to do anyway, but if you're going to, do it to somebody that's done well in those where the market's gone the other way. If you're rooting on somebody who has gone down with the market every time the market's gone down, is that really that important that you're following them right now? I mean, does what they say really mean a whole lot? I mean, let's think about it, guys. But, again, beyond that, we have a lot of them now talking about, we entered Bitcoin because, possible inflation. And so what that means is if there's not inflation, but there's deflation, they're going to get the heck out. And so all that buying that they've done, all that buy pressure, the demand pressure becomes supply pressure. So make sure you guys understand this stuff because I don't think enough of y'all are paying much attention about it. And again, the idea is to pay attention so you don't get rung over the coals with what the market's doing. Remember, I told you guys already, and you talk about these big players are the guys that have used you as liquidity for decades. These are the guys that use retail traders as liquidity. I'm telling you, when you talk about order flow, when we discuss order flow trading, we refer to these big players as other time frame traders. And we refer to retail as liquidity. Because it is retail's placement of their, buys and sells and whatever that fuel the moves up or down because they get the big people moving. They are liquidity. Again, remember, retail generally gets excited at the top. They buy the top. They get depressive at the lows. They sell the bottoms. They sell the lows. But you guys are sitting here, you're cheering on these big guys who come in who historically use you as liquidity. Why would you do that? Doesn't make a lot of sense to me. I know there's a lot of, talk about Robinhood traders and there was the GameStop thing here where they, these social media traders, I guess, or whatever, TikTok traders now, hurt the hedge fund there. GameStop was so short and whatnot. And, that stuff happens. But at the end of the day, for the most part, those hedge funds are going to be the ones still in. And the TikToker's going to end up broke at the end of the day. Because that brute force only works until it doesn't anymore. When the big guys figure out what you guys are playing, when they get that all figured out and they get that timed, you're nothing but liquidity. But the TikTok traders and these Robinhood traders think that they know what they're doing. And so they'll keep doing it even when they're losing. Again, this is what happens in market tops usually. Yeah, I saw BlackBerry today. Yeah. Again, one of those ones that pops up there. I'm with Scott. I didn't know BlackBerry was still in. I had a BlackBerry back in 2001, 2002, I guess. Surprised they're still in business, honestly. But it's those types of things. It was Hertz in the middle of a bankruptcy, retail traders buying it. Absolutely crazy. It is what it is. Things may work for a little bit, but this idea that all of a sudden retail is going to beat out the big, smart, professional trade. No, it's not going to happen, guys. It's not going to happen. They may win the battle, I guess you could say. They're winning the battle, but they won't win the war kind of idea. I think it's really, what's the word I want to use here? I don't think, I think if that's what you think, I don't think that you really understand what you're doing in the markets, honestly. I mean, anything can happen. Anything can happen. But we don't be contrarian just to be contrarian, folks. And I see a lot of that out there in retail. People say they're contrarian just because to be contrarian. No, I'm not contrarian right now just to be contrarian. I've given you guys this huge thesis, this whole workup. I've explained QE. I've explained the dollar. I've shown you charts on how this goes. Credit contraction, 90-year cycle, all these things. Socioeconomic theory. We talk about all this. So there's a ton of stuff behind why I believe the way I do. None of that means it has to happen. None of that means I'm correct. But the one thing you cannot say is that I'm just spreading FUD or I'm just being, a bad loser or anything stupid like that. There is a strong consistency between behind what I've said. But this is something that people aren't doing the other way. It's blind faith. It's, Saylor's here. Tudor Jones is here. There's no way it can't go down. Everything's going to go up. Tether is, the questions about Tether is just FUD. Guys, some of the arguments I hear about the Tether thing is, it's such a small part of the market overall now. Well, maybe, but it's a large part of the daily volume. Tether is a large part of the daily volume. Now, you guys know, I think they've probably got 70-80% reserves. And I think that's enough that going through court, if they're found guilty of not having, what they said they were going to have, whatever, that they'd probably just get a slap on the wrist. The idea being that if, the government, the judge thinking, man, if we kind of shut them down, that's going to hurt a whole lot of people. Maybe they won't care. Maybe they'll be like, well, they shouldn't have been in it anyway. But I don't think if you just dismiss these questions about Tether, especially because the company refuses to be transparent in any way, refuses to do a transparent audit, I think those guys, just in life, that is risk, significant risk. And if something happens all of a sudden with Tether, do you think you can get out in enough time? Do you really think you can? Everybody thinks, they're just going to go into Bitcoin. Really? You think so? Because I'll tell you what right now, with these big players that are in here, if there was some strong, something strong that came out that Tether was, was all fake and all this stuff, kind of what everybody's saying, I don't know that's even it. But if it was to come out that way, these big players, they're exiting the market. They don't want to deal with all the volatility that would ensue from that, which means supply pressure, which means price declines. Significant. I mean, there's lots of ways that Bitcoin can go down, guys. Don't blindly think that it can't. Now, the worst case scenario in all this is I'm wrong. Or I say worst case for me is that I'm wrong and we all get rich because everything goes up anyway. The worst thing for you is you act like this doesn't matter and all this stuff is just FUD and all this other nonsense. And then something like this happens, or one of these things we've talked about happens, and the market goes to crud, and you just keep holding because you just can't see yourself getting rid of it because you have no plan. And you lose your money. That's the reality of it. And I think that's an important reality for people that have been holding on Bitcoin and maybe have gotten to the point where they have 8 figures. It's all on paper though, guys. Until you actually realize those gains, not realize them in Tether, realize them in cash in your bank. Until you do that, you don't have gains. You got paper gains, right? And if Yellen has her way, probably looking at, here in the U.S. anyway, taxing unrealized profits, unrealized capital gains. So you don't even have to realize the gains to get taxed. I have to pay tax on it. And if that happens, guess what? People are going to realize those gains, which means they're going to sell onto the market. And if you have a significant amount of it, that's a lot of supply pressure that could come on price. So again, guys, there's lots of ways Bitcoin can go down. None of this is me saying that it definitely is going to. But it's me bringing you the realization that this romanticizing of Bitcoin is going to be the future of everything and it's going to go up and there's nothing that can stop it. That's nonsense, guys. There's always things out there that can stop it. These are just a few. But see, this is what I'm talking about. Simple Rick, man. This is what I'm talking about. Tether FUD. You said Tether FUD is mostly being spread by New York crypto mafia, Circle, Coinbase, Gemini, etc. I mean, the fact that you just come out there and say that like it's truth. You don't know. That's the thing. I don't know. You don't know. But if you're not prepared to be wrong, then you're prepared to lose money, is what it is. You have to, guys, you absolutely, if you're going to be in financial markets, you have to have your convictions about your positions need to be malleable. You need to be able to be okay with new information coming in and you going, oh God, I got to do something different, which means that you need to be prepared, which means you need to know where your invalidation levels are, when you need to get out. But we don't get that. Most people get in there. And this is the thing. They just believe that thing is going to be a thing. And when I come out here and I say something against that, and I'm just telling you, listen, the reality is you don't know and I don't know. But you have to be prepared for what if it does happen. That's me trying to help you guys stay in the market longer, to stay profitable longer. Because otherwise you're just going to do your emotional thing and hold on. And if you thought holding from 20 to 3 was a doozy, imagine holding down below 3. If something like any of these things happen, guys, I mean, any of these things could really send it down there. Again, not saying it's going to, but the reality is that it could. And you have to be prepared so that you're not holding it through all that time. That's the thing. Yes, chemo. Yes. Failing to plan is planning for failure. Exactly. It's cheesy. It sounds cheesy, guys, but it's very true, especially in the markets. Everybody out here on a wing and a prayer. You kind of enter in, you go, God, please let it go up. Or if you're shorting it, God, please let it go down. But you don't really know what you're doing, and that's the problem. That gets you caught. And if you're here, especially, I don't want you guys getting caught. I'm not the guy out there that's going to shill you anything. I don't care. I don't make money off shilling you guys anything. I'm just trying to get you guys to open your eyes and your minds and to think. Because it's easy not to, especially in crypto Twitter, but social media in general. Because all your feeds are curated to you and it just becomes this big, huge echo chamber. It's not good stuff. Let's see here. Let me kind of catch up with you guys here. Let's see here. I'm not sure how to pronounce your name here. Is that Chethan? This is based on just Elliott Wave. What is the Bitcoin price you see in the short term? If Bitcoin drops to 23,925, is it a good price to buy Bitcoin? So again, it becomes, okay, so we look at what's going on here. There's a couple of possibilities. I'm still thinking we may have further up, one more leg up, which might get us around 47, 48,000. And that, of course, is based on this descending channel here, or wedge here, okay? But if we're dropping down, locally, we're going to look here. Does it get below the 1 hour pivot, the 4 hour pivot here? Does it get below wave B here? If it does, immediate target is going to be the S1 pivot. If it continues down through that, the immediate target after that is the descending channel support. But if you're losing this descending channel support, the same way you have this target based on the height of the channel up top here, you have that as the target on the way down as well. And that potentially gets you down here around 16.5. And if it gets you down here around 16.5, well then it's not a simple ABC. it's potentially 1, 2, 3 of 5, which means you'll have a 4 up and a 5 down lower, and that's just wave A. You have 3 up for wave B, or a triangle for wave B, and you'll have 5 more down for wave B. And again, in that situation, I think you're probably getting at least a 9,000, potentially down to mid-7s. But even if that's the case, that's just a wave 2. Deep wave 2, but a wave 2. But if you're continuing to drop down below that, the mid-7s, 7,000, I think you really open up the door to below 3. But there's no way to know that from where we're at right now. Again, we've talked about this could potentially be the bottom here, and we're heading up. And so if this is ABC done here, then this becomes a 1 and a 2. Get rid of all these here. And so that means we have a wave 3 coming up here of around 39,220 or so, which takes you, pretty close up. It gives us a 5 up here at around 41,200 almost, right near the all-time high. But I think the big thing about that is you just watch this descending resistance here. If you get above that, I think that's as good a signal that you can get to go long. And you're long for about $10,900, $11,000. But if you can't do that, if you're going to drop below the pivot and then drop below this swing low right here, drop below this ascending support, I think you really open a case at least getting down here to the S1 or descending channel support. Potentially further down based on the height of the channel there. So that's how you kind of look at it there. Make sure you're paying attention to how it's moving. That's what we do every day, over in TWC. We do Bitcoin updates a few times a day. If something significant happens between them, I'll update again. Just to kind of keep everybody aware of what the possibilities are as it's going there. I can't tell you guys what to trade or how to trade it. Well, first of all, it's illegal for me to do that. Here in the U.S., it's illegal for anybody in the U.S. to tell you specifically, based on your circumstances, what you should do. What we can do legally is we can talk about the way the market looks here and where the projections may be based on that price action. Now, the people that can tell you what you need to do are the ones that hold an RIA license, registered investment advisor license. But if they're going to tell you what you should do specifically, they're going to charge you a heck of a lot of money to do it. So just understand that, guys. Be careful if you're asking somebody in the U.S., if you give them your situation, they say, well, based on your situation, you should do this. That is against the law. Be sure you guys, that's a federal law there. Do not fall for that nonsense. Because that's somebody who doesn't know anything about anything. Because if they did, they would know that they need to figure out who you are as a trader investor first to even begin to have an idea of what may be in your best interest. And if they're not registered, taking those exams and whatever, got licensed, why do you think that they would know what to tell you? But you guys do this all the time. You're looking for somebody to tell you what to do. You can't do that. You've got to learn how to do this yourself. And it's easy to learn. It takes time to perfect. But trading is not rocket science, guys. It's not really difficult. You make it difficult. Let's see here. Is that what Todd's charging there, Hank? It looks like he says, manage your Bitcoin account for 3% of the result he makes, minimum 10K USD. Yeah, I think he's registered, though. Yeah. He's got a little fun thing that he does, or whatever that he does there. Yeah. And God, I hope I'm getting your name right there. Chethan? Yeah, you're welcome. You're welcome. Sure. Tell you right, it says, no worries, Chris. We're all accredited here. Yeah. Alex, you said looking at the COT report also looks as tough. It looks as though shorts are starting to climb. Yeah. And, as price makes its way further down, your short side is going to grow because there becomes more and more confidence in it continuing lower, guys. At first, there's not all that. You remember? Crypto Twitter right here, guys. This was Crypto Twitter. Buy the dip. Buy the dip. You're an idiot if you're not buying dip. Small brain if you're not buying the dip. And it went up there. Yeah, look at us. We're telling you right. Oh, look, you got to buy the dip. 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 Oh, yeah, we're all right. Well, they're telling you to buy the dip. So, but yet what we have here, market structure, high, low, lower high, lower low. Currently, potentially a lower high here if we get another lower low. I mean, our market structure is down. This is the reality, guys. You can't just blindly buy dips because you're going to run out of money. So you guys got to figure out what you're doing, and how you're looking at it and what your goals and all these things. I mean, just you guys need to know who you are as trader investors right now. You've got to know what is your current, you got to be realistic. What is your current wealth position? What is your current financial position? Two different things. Wealth is what you have. Your financial position is what you're making. Okay? You've got to understand, you've got to give real thought to what your short, mid, and long-term wealth and financial goals are. You have to understand realistically what is your honest to goodness deal with risk. I'm a risk-adverse person. I don't take a lot of risk that I don't have to take in the markets. Some people, and you usually find them, usually they're a lot newer trader, are a lot more risky. They're a lot more risk tolerant. But you have to understand which one you are. You have to be honest with yourself. You can't just say you are. You have to be realistic with yourself because you can't lie to yourself, guys. You're just going to be hurting yourself. You got to know how much time do you actually have to trade. Be realistic. If you're working a full-time job, you can't trade all day every day, right? But not only how much time do you have to be honest with yourself about how much time do you really want to spend trading. You could have 8 or 10 or 12 hours a day to trade, but only want to trade, only be interested in trading 3 or 4 hours a day. All these things are going to help you understand who you are as a trader or investor, so that way you can find the right time frame, the right style of trading that makes sense for what you're trying to do. As long as you guys continue going here and have people tell you where to buy and where to sell, you're always going to be at their mercy. What happens if they don't show up one day? What if they tell you buy here and then something happens and they're gone? They just leave. Are you going to know when to exit? What makes you, why would you listen to somebody telling you where you need to buy or sell when they could be completely different and they probably are of who you are? My position in what I do, I can guarantee is unlike any of y'all out there. So I could say all day, yeah, you should buy here, you should sell here. But for some of y'all who are on the other side of the spectrum, that may be a bad trade. You may have a much better trade doing something a little bit different. This is the reality though, guys. And I know it's not what you want to hear. You want to hear you can have somebody tell you where to do, and especially do it for free, and you're going to be just fine to make all this money. Come on, guys, be honest. That's ridiculous, right? That's ridiculous. And once you figure out that's ridiculous, you got to figure out what do you want to do. Well, whether it's us or somebody else, you need to learn how to trade. There's a lot of free information online. The problem with it, though, as I put out, is that if you're new to trading, you don't know what's a half-truth or what's a lie out there. Again, everybody thinks that the Fed's printing all these dollars and we're going to have inflation, right? We're going to have all this inflation over everything. But the reality of it is that money isn't really entering the market. Most of it. So if it's not really entering the market, well, you're not going to have the result that you expect to have. So just some thoughts out there, guys. Again, I would never tell you that I know absolutely what's going to happen. And I would advise you, just in general, as human beings, to run away from anybody that does. Anybody that tries to guarantee you that price is going to do A, B, or C. Either they're a fool and you're following a fool, or they know they can't guarantee it, but they're just trying to get your money. All right? Because there's a lot of that out there. Stop listening to them. Stop letting them take all your money from you. You don't have to do that. Mike W. says, I will keep it at investing. I'm interested in trading, though. Seems like a good skill. And it is. It is a good skill. But trading, this is another thing, guys. Trading is not something you will be fantastic at overnight. Because a lot of what goes into becoming a good trader is something that can't be taught. It's time in your seat. It's watching the charts correctly. Okay? And there's no anything that can take the place of that. So you have to learn how things happen anyway, and then you have to watch them happening. It's like anything else you do in life, guys. You can learn the skills. For instance, if you want to play tennis or football or soccer or baseball or whatever, you can learn how to hit the ball. You can learn how to catch the ball. You can learn how to run patterns. But until you actually get out there and do it, well, first of all, just see it being done. Second, actually get out there and do it. Until you're doing that and you've got experience doing that, you're still a rookie. You're still green. You're still going to make mistakes. Stop trying to make things happen overnight, guys. Because that's the quickest and easiest way you're going to lose money. You will not make your money. And I'm telling you from a point of reference, that I've been there. I started out as a retail trader, guys. I lost more money than you guys will probably ever see at some point. Hopefully not. Hopefully you'll make a lot more. But I've lost a lot of money. A lot of money. But I decided that I wanted to learn how the markets work and how to actually be successful with them. So I started paying attention. I started learning. And gradually started making money. Didn't happen overnight, guys. And it won't happen overnight for you either. But if you're willing to put in the time and effort, if you're willing to forego all the nonsense that's in social media, and really just kind of put your thought process where it needs to be, you can be successful with it. I firmly believe it. I can't guarantee you that you're going to be, guys, but I think if you take this approach that I talk about all the time, I think it sets you up to have a lot better chance of being successful. If you can learn to manage your risk intelligently, if you can learn to take profits consistently, those are two things you can do that are going to make you significantly, to give you a significantly more successful opportunity there. Again, I can't guarantee that anybody's going to be successful, guys. But I've seen over the years with everybody that I've worked with that if they do those two things and they're serious about it and they get off what everybody else is telling them, all the nonsense, they tend to get it going. They tend to have a better understanding of what's going on, which makes them better traders. It's not that I'm doing anything for them specifically, other than helping them understand where they're going wrong. It's this coaching idea. Same way as if you're hitting a ball, guys. In baseball or catching a football or something. Let's see here. What's going on, just in time? Hey there, Crypto Mowgli checking in. Good to see you. Tellurrider says, I was doing okay trading and long-term profitable, but honestly was lucky not to lose more money before you joined us. Oh, that's awesome, man. And changed my risk management. It really is, guys. It really is such an important thing. Proper risk management. Proper risk management. If you can do that, man, it makes it easier to make money. If you're not doing it, it makes it easy to lose money. It really does. Byron, what's going on? He says, TWC is incredible with BMA updates on a daily basis. If you're not a subscriber, then you should take a strong look at why you are trading. No one knows everything. I appreciate that, man. Yeah, exactly, guys. The one thing that you're going to get from me that I will tell you this much is that I care about whether you're learning or not. I don't have to do what I do here, guys, but this is really, what we do at TWC has really made my heart feel just amazing. I get these comments and these messages from members that are talking about how it's changed what they do. And sometimes I remember to post them on Twitter. A lot of times I don't, guys. It is what it is. I do a lot of work here. And I'm going to be honest with you. I have a lot of issue, a lot of difficulty kind of tooting my own horn thing. But, the reality of it is that's, for me, that's what's great. And I don't know how long I'll be doing this. So, if I can help people while I'm still doing this, what I mean is doing what we do at TWC. I think I'd like to grow it into something huge. Because people are going to go out there and going to spend their money anyway. But they're going to spend it most of the time with people who don't care. People who are just trying to get their money. And if anybody that's in TWC, they'll tell you, man, I'm always there, trying to help out and whatnot. Sometimes it takes a little bit longer to get back than other times, depending on what kind of action's going on in the market and how many people I have messaging me. But that's why, I have Adam and I have Scott, people that I trust, helping me out there. And hopefully, before too long here, we'll have another couple of analysts in there so we can provide a heck of a lot more charts every day. That's what we're working toward right now. But, if you're with us, we really care about whether you are successful or not. But as I've said, guys, we can't tell you when you need to enter and exit. We can say, here's the market, here's what we're looking at. This is the setup. This is, if I'm looking at this, and if this is the count here, then I would expect this. Or this is the pattern here, and so if we could break out here, then the target would be this based on that pattern. These are the things we can do. We can help you understand how to do these things yourself. And you've got, I guess if you're tier 3 especially, you've got professional eyes looking at the market, giving you opportunities. I know a lot of our members have made a killing off our hot takes here over this past year, really. And so we just want to continue that through, this year here as well. Let me see here. TV Canal, what's going on, man? He says, hey, what do you think? I think we could complete a zigzag correction to 29K, and now we'll see what happens. Yeah. Well, I don't know about 29, maybe a little bit lower here. Again, looking at this maybe as an A, this red count here as an A, a B, and then maybe this is a 1, 2, 3, 4, 5 as an ending diagonal here, maybe. So it'd be like a ABC is 1, 2, ABC is 3, 4. Have an ABC down here toward this 28,000 area, maybe the S1 pivot. I could definitely see that takes you just below this swing low right here. I could see that. Yeah, that's what we were talking about earlier. And if it continues going through there, the next target would be this descending channel support. But again, it's if we get an impulsive breakdown of that support, pattern target based on the height of the channel here, down here around 16,000 and a few hundred there. So, but that's a long way off from where we are at the moment. I don't want people, again, I do this and then people go out there, oh, well, you said it's going to go down there. No, I didn't. We talk about how it plays out here. We look at step by step what you're looking for. And this way, whether you're a shorter term trader or a longer term trader, you've got some ideas of what you're potentially looking at. Again, if we break out through the top here, we're looking at 47, 48,000. If we can break through this descending channel resistance here. So that's, that's definitely a possibility there as well. I think even if this is, an ABC here, I think, as I said earlier, I think we've still got a little bit further up here. Around 36,000 maybe. Let me see here. Because I'm looking at kind of this way right here real quick. This right here. And so the expectation is we get up here maybe around 61.8 or something. 35,810, 36, 177, 65% area. To finish that off is wave C and then head on down if that's the case. If that's the case. But again, if we're breaking up and through this, this potentially is this is potentially ABC done here. In case this be a 1-2. And so our move up through this line would get us here at least at the 1618 extension here around 39,220 as wave 3. Wave 5 up here around 41,178. But until we break out of this descending resistance, that's just a possibility. We're still vulnerable to head down. I think once you break out of this descending resistance, that's your cue that you're probably headed up. And so if you're going to head up, this has to be an A, this has to be a B, and this has to be a C. So you're looking to get above this swing high here to add confidence to that. This 40,127. Getting above that adds confidence to the idea this ABC is done. And this is 4, and then we've got 5 still up. There's a lot of things to look at, a lot of ways to kind of confirm it as it's moving there. And, again, dropping down, you're watching for a drop below the pivot, drop below the ascending support, drop below this wave B right here at 30,931. That adds confidence to the idea that this is topped here and we're heading at least down to here, if not here, if not lower on that. Yeah, and guys, here's the other thing. Great, you bring up a great point there, TV Canal. Yeah, and God, I really hope you haven't said that I'm butchering your, the name there or anything. So hopefully I'm saying it correctly. But here's, you mentioned a good thing there. You said, you tried to long at the golden zone, but it didn't fill you. So now it's really hard to trade. Don't force trades, guys. If there's one general bit of advice I can give traders, it's don't force a trade. If it is not a clear reason to enter, do not enter. Because the less and less clear it is, the more and more risky that entry is, the more and more likely you're going to lose money. Trading is not about being in a trade every day. Trading is not about making so much money every day. Trading is not about entering a position just because there's a chance. Successful trading is about looking for those, what do we call them? Those opportunities, those higher confidence trades. The ones that are more likely to happen. Are you getting on a 1 hour or 4 hour time frame? Are you getting a bearish divergence and oversold or a bullish divergence and overbought? Bearish divergence up and overbought or a bullish divergence down and oversold. Those are higher confidence trades. Look right here. Let me show you guys something here. Look at this. You see how you've got these lower lows with price right here? Scott and I were talking about this when this happened. You've got these higher lows right here. This is bullish divergence in oversold. Right here with this, after a good move down. That's where you long. That's a good entry on a long there. It doesn't guarantee it's going to go up, but that is a good entry. That is a higher confidence trade. If you're just trying to long off here, or maybe even long off here, less of an opportunity. Higher confidence trade. See this channel coming down right here? Breakout, retest, pop up. There's your long. There's your higher confidence entry. So don't think that you absolutely have to find a way to get into a trade even though it looks like crud. It looks like hot trash, right? Stay away from it. Wait. Patience is important in trading. Let me see here. Can I tell my thoughts on the movement of the DXY in the stock market? Yeah, I did that earlier, Clarkman. Yeah, man. And we looked at gold earlier as well. So yeah, just go ahead and zoom back to the beginning of this, back toward the beginning of it, and you'll see all that stuff we were talking about there. Sure. But yeah, guys, I mean, these are the things, I tell you things that you don't want to hear. I understand that. As new traders, you want guarantees. You want people to tell you when to enter and when to exit. You want to be in a trade at all times. But these are the things that result in you losing money. These are the things that are going to lose your money, guys. You absolutely have to think the other way about it. Otherwise, you're just going to be liquidity. You're going to be that grease that keeps the engine going. You're going to enable these larger players to move. And that's what goes with the market, guys. It isn't small little retail trades. Retail trades aren't moving the markets. It's the big players. Which is why we spend so much time talking about and what they're doing rather than what retail does. I talk about retail and try to get you to understand the traps you may be falling in as retail traders, and trying to help you recognize what you're potentially doing. I don't try to talk down to you as if, oh, you're such an idiot, you're stupid or something. No, not at all. Not at all. It's always about helping you understand where your mind may be at. And you go, oh my gosh, it's there. And if it's there, well, then you need to change it. Because if you don't, you're just going to keep losing money. And that's not fun. Again, guys, if you are not serious about learning to trade, leave the markets, go do something with your money that's going to provide memories. Good memories. Because I'll tell you what, when you're on your deathbed, when you're sitting there and your life's flashing before your eyes and everything, it's not going to be about, oh, I had that $2 million house or that Lambo or whatever. It's going to be about, man, that vacation I took with my family. That night I spent dancing in the kitchen with my wife. When I was playing with my kids out at the park. Those are the things that matter. Those are what matter, guys. And if you're not serious about learning to trade properly, man, I'm telling you, you need to go out and just spend your money to do those things. Because if you're not learning how to trade properly, you're just going to lose your money in the market. And you won't have done those things. You'll have spent all this time laser focused on the market, ignoring all those things. You're not spending time with loved ones like you should. For me, guys, it's all about family. Trading should allow you to have more freedom and more time. If it's not, to me, why are we doing it? You don't know what tomorrow, but you don't know if you'll wake up tomorrow. But you want to be able, if you do, heaven forbid something happens to you, you want to be able to have these great memories before you pass. And if something happens suddenly where you don't have time to go through these memories, you want to be able to leave these great memories with the people that you love. Stop just throwing your money in the market just to throw it in there, guys. Everybody says, oh, I'll do it tomorrow. I'll do it tomorrow. Tomorrow never comes. It's easy to push things down the road. All right? So, really, guys, that's where I come from. What I'm doing here, what I do in my personal life, that's what I live by. So hopefully, it connects with y'all and you do those things as well. Maybe it's because I'm older these days, so when I was young, a young gun, I didn't really think about all this stuff. I always thought I had time. But as you get older, you start understanding maybe you don't. I've had more than a few friends pass away this past year. Some from COVID, some from other things. Had some close calls with family. You can't get back the time that you put away, guys. The time that you ignore. So only be in the market if you're really serious about making money and doing it properly. Otherwise, please, for the sake of yourself and your loved ones, man, take your money and go do something special with it where you can make those memories. Because those are going to be worth a heck of a lot more than what you're doing in the market. The idea with the market is to get more money to do more of those things. But you can't forego that time that you should be spending with them anyway as well. Because again, you never know if you or they are going to wake up tomorrow. Most difficult thing in the world, guys, is regret. All right? So, yeah. Can't we have Chris Inks back for 2018 far less depressing? No, it's not meant to be depressing. It's meant to be a reality check. It's meant to be a reality check, guys. Last thing I want you to do is wasting money here, okay? Let me see here. The NASDAQ E-mini drop. I don't know if I've got the NASDAQ E-mini on here anywhere. Let's see here. Oh, well, I do have something here. Oh, you know what? Let's just do it this way. We'll just pull up a new chart here. Oh, let's see. Copy. All right. Let's see, where are we at here? I always forget what it is because I never look at it. If you know what the ticker is real quick here, I can pull it up. Why do I always have trouble finding this? Let me see here. Oh, if anybody has the NASDAQ E-minis off the top of their head, let me know what that ticker is real quick. Let's go to futures. NQ1, it is NQ1. Okay. Thank you. I thought so. God dog it. Sometimes you just kind of second guess yourself, right? Man, look at that. Look at that. First of all, there's your weekly, man. If that doesn't concern you, what the heck? All right? I mean, if I'm looking at this, I go 1, 2, 3, 4. Let's see here. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, maybe. Yeah. Zooming in here, looking like a 1, 2, 3, 4, 5, finishing up here. 1, 2, 3, 4, 5. So first thing I want to look at here real quick is we're moving in sideways between the pivot and the R1, which means we could potentially see it get into the R1, or we'll see it reverse here and head on down to the pivot. If it reverses and heads on down to the pivot, if that pivot does not hold, I think we're down. If you get a bounce off that pivot, though, then it opens up some possibilities about some higher highs there. But let me zoom in a little bit here. Let's see, it's going to have 15-minute. We'll drop in there. Is that the high there? Yeah, that's the high. I've got a 1, 2, 3, 4, 5 probably. Looks like a 5. Yeah, if I'm looking at this 15-minute chart, it's looking like a 1, 2. You get a retracement here right around the 70.5. We've got an ABC. It's in 3 waves. That's corrective. So as long as it doesn't give us a 4th and 5th wave, that looks corrective. Looks like what we'd be looking for. If that's the high off there, we'd have a wave 3 down here around 12,859. Wave 5 around 12,720. Makes sense. If we look here where that would be, and where wave 5 would be, notice wave 3 coming at this previous area of support and resistance. Get a bounce there, come on down. Previous area of support here. Resistance and support. So again, remember I told you, price looks like it's moving diagonally, but at the end of the day, it's just moving vertically up and down. And it gives the appearance of diagonal. So you're just looking at other areas of support and resistance. So this lines up pretty well. You can see it's got this high volume node here. So that would be a significance of the other high volume node right here. Significant areas where you look for price to reach and to get an initial bounce off of. So yeah. St. Nikos says, thanks for saying all that. Been losing money like a straight chump. And he laughs. Seriously. It is what it is, man, Again, I think people should have goals, whatever they're doing in life. And if you're in the market, I think your goal should be to... I can't tell you what your goals need to be, but I think if they don't include having more time and more freedom, then I think you're really losing what trading could be. Really losing the potential with trading there. Let me zoom out here a bit. Let me make sure that, that's just that if that's the top is what we're looking at. That may not be the top though. This could be like a 1, 2, 3, 4, 5. So 3, 4, 5 going up. I don't have a count coming from the bottom on these E-minis here. So this would likely be a 4 here. So this would be a 1, 2. This could potentially be a 1, 2, 1, 2, 3, 4, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1, 2, 3, 4. Yeah, 5. 1, 2, 3, 4, 5 there. So I can count 5 coming off this here, which would probably be a 4 here. So yeah, I think it's potentially the possibility there. You can also look at the fact that you can see that it's bouncing right here off the pivot. Now, if you're bullish, there's a lot of wick on here. So that's a lot of demand. So you've got to watch it. But it doesn't mean supply can't continue to come through it. But that is something significant to watch. So this could be a 4 with a 5 still coming up. So you might be looking at that R1 pivot here on the 1 hour or 4 hour, which gets you right around 13.6 or so. So that's still definitely a possibility on that right there. Because again, maybe you look at this as a 1, 2, 3, 4. Let's see here. It's a little short. It's a little short. Doesn't hit the 161A, it goes to 1232. Yeah. But I would watch to see if you get a lower low out of that. If you get a lower low out of that, I think that may be the top there. But it could potentially push up a bit higher toward that R1 pivot there, 13.6 or so on the 4 hour. There is a bearish divergence here at the moment. Showing up here at oversold or overbought. So you've got that going on there right now. Yeah. So, you want to see how does this, it looks like it's going to close out pretty well here. It's about 17 minutes left. So unless there's some sudden selling going on there, unless I can pay it, but just because it closes like this doesn't mean it has to go up. It builds a good case for potentially doing so, but it definitely does not have to. If we check here at the 1 hour, see the 1 hour doesn't look quite the same. 1 hour still has that same bearish divergence, but importantly here, RSI and Stochk RSI have not really gone down into oversold. Stochk RSI bouncing just barely out of it, not convincing. RSI itself is in a downtrend, makes a lower low there, but hasn't actually gone into it. And usually we look for it to enter it. So that would give me some thought that it's probably going to head lower there on that. So yeah, that's definitely bearish engulfing there, but no follow through yet on that. So yeah. When you sign off, you're going to surprise your dog with a nice midday walk because you can, because trading gives me my own time. Then come back and make my wife a surprise fancy latte. Hey, there you go, Telluride. There you go, man. Oh, I did pronounce your name correctly there, Chetan. Oh, man, it's awesome. Fantastic. Great to hear it, man. Where's the 21-week EMA on your chart? I don't usually use EMAs. I don't use moving averages. Most of the time they align with my support, my demand and supply structures. So I don't usually do that. You are mentioning that Bitcoin in a bull market usually tests these, and it hasn't tested this since September 2020. What are my thoughts on likelihood? Well, again, that's kind of, if you get to it, you go, okay, well, normally in a bull market it tested. Well, okay, but it's still got to come down to it. So I guess I can throw it on here real quick before I go. You said the 21 EMA? Let's see here. And I think you're talking about what, the daily? Is that what you're talking about? Let's see here. No, maybe you're not talking about the daily. We're hitting resistance at the 21 EMA on the daily here. So, again, it's a good place for resistance, right? Right there at the R1 pivot on the daily here, right there at the 21 EMA. If you're talking about the week, maybe you're talking about the weekly. Let's see here. The weekly has it above the pivot here. By the way, guys, if we're these are brand new pivots for the daily. They're from the beginning of this month. Remember, your daily pivots last the year. Oh, I'm sorry, your weekly pivots last the year. And so if we're dropping below the weekly pivot here, I think that really gives you a lot of reasons to start looking potentially lower. From a larger term perspective, we've been talking about a lot of shorter term trades. If you're more of an investor, depending on wherever you've got in, I would watch this. Do we continue to get rejected at the R1? That's not a good sign. If we drop down below the pivot and close below it on the weekly, especially doing so impulsively, so large candle, large volume, that's not a good sign. And then I would be looking at least right here at the S1 pivot, which is right around 12,150 or so. Now, the other thing I want to point out here, guys, look at this volume right here at the very top. These two top candles. Look at the volume spike here. This is supply coming in. This is not good. You don't want to see this. See how you have over here. See how you have on this one up here at the top? You got this supply, this spike. See on the bottom here, you've got these spikes. This is demand at the bottom. But these volume spikes at the top are supply. This is why we watch our volume in relation to our price action, because it's the one place that the big boys can't hide what they're doing. They have to come in with some size because they have size. They can't just, minimize it. And so this is a warning right here. Those 2 weeks right there, that was first 2 weeks of January, right at the R1 pivot, significant spike of volume coming in. So again, I know we're all looking at potentially higher and whatnot, but don't forget that could be a top there. We are in, as I showed you there on this lower time frame, our market structure is down. We've got lower highs and lower lows repetitively. So until we break out of that descending channel, I think you've got a good case for lower. How much lower we'll see. But yeah, again, spikes over here, at the tops. Spikes right here. This one in particular, spiked back, came back, and then it went up here and spiked again. And then it did the drop there. But generally your spikes are coming in, at those tops as you're getting up there. So you have to pay attention when you get that volume spike in there. By the way, there's your monthly. Watch your monthly. This could turn into a really, really ugly monthly candle here. So, just be careful of that as well. So, anyway, let me see here. Oh yeah, Mike. Yeah, like Telluride said, it's Elliott Wave, man. Yeah. So you're impulsive. If you're going in the direction of the trend on whatever time frame you're on, it should move in 5 waves. There's a lot more to it than that, but you count to 5. Your pullbacks, your retracements are only 3 waves, ABC. So again, that's why I'm looking locally here, and I say, okay, well, if we look at this right now, this is 1, 2, 3 right now. So right now it's just corrective, potentially. I have to look for it to get much further up and then pull back, and then further up to get us 5 to go, okay, it's probably impulsive. And at that point, we're likely near here or pushing out through it. As he goes there. Elliott Wave, I'm sorry. Let me type it here. Elliott Wave. There we go. Yeah. Yeah, and of course, the other thing we talk about a lot, of course, is volume in relation to price action. It's not just, there's a lot of volume there or whatever. You have to know where to look. You've got to compare your volume and your price action to other areas of volume and price action, comparable areas, to get an idea of if is it expanding or is it contracting, to give you an idea of what may be going on with price there as well. So yeah, but let me get out of here, guys. Wow, I did this for 2 hours. All right, as you can hear, it's kind of going out a bit more here. So let me get out of here. I hope you guys have a fantastic day. Again, don't forget, guys, we'd love to have you with us. You can get in there for 25% off right now. Welcome 2021 is the code. Welcome 2021, no spaces. Or you can just hit the little black box in the right about this area of your screen when you get to the checkout page. It'll say Welcome 2021 in that, and that'll apply the discount for you automatically. But we'd love to have you here, guys. And you know what? It's not even me, honestly. It's the people we have there. You've heard from some of them here. We've got just an amazing group of people, and I believe it's the reason why most of our members stay with us. Going on now, most of them now, almost a year. We have a lot of members who've been with us 2 and 3 years. And now the average is getting up there close to a year now. And that includes all the new people that have come in this last year. So I think they stay there because we've got a pretty good group of people, man, and they're very helpful. I'm not egotistical enough to believe it's because of me. But I think we do have a great group of people in there, help keeping people from being too emotional and kind of really looking at the market from different angles and learning. And that's what it's all about. So I hope you guys have a great day. Thank you so much for joining in. As always, remember, the only thing you control in the market is how much you lose. So no matter what it looks like, no matter everything else we talked about, at the end of the day, it's all about that risk management. All right? You guys have a great day. Take care. If I don't see anybody over in Discord, any of y'all over in Discord, I'll see you on Wednesday at 11 a.m. Central Standard Time. Take care.